Hi guys, welcome to Money Theory. In today's video, since it's the end of the year, we're going to talk about the year-end review. A look back to 2022. This was a year of high volatility, both big swings in the up and down direction, although the market has been trending downward. And growth and tech stocks have had bigger losses. You can see the S&P 500 is a nice indicator of the overall market. Since the beginning of the year, it's been down almost 20%. With Bitcoin as the representation of crypto, you can see that it has dropped about 65%, and smaller cryptocurrencies have dropped even further. And Tesla, as a representation of a growth stock, it has been down much more than the S&P 500. It has been down almost 70% year to date. Wait a minute, 69%? Maybe this was Elon's plan all along. Well played. So after looking back, we can evaluate ourselves, and then we can look forward to 2023. You can't go back in time, you can only move forward. So take the lessons from the past that you've learned, and then you can make strategies for the future. So this is a good time to evaluate your portfolio and its performance. Look at each stock and index fund in your holdings. Look at the price now, the price you bought, and your evaluation of it. Do you still believe in its story and the thesis for why you bought into it? Does it still have future value, or has the story and value changed? We'll look at Apple as an example. So for example, let's say the current price is $130 per share, and your average purchase price was $120. In total, you bought 100 shares, so you have a total cost basis of $12K, and now the value is $13K. So your profit is $1,000 total, and an ROI of 8%. Looking at Apple in the 1-year time frame, it's dropped about almost 30%. Looking in the past 5 years, it's risen almost 200%. Next, take a look at Yahoo Finance to evaluate the company business itself. Go to Yahoo Finance and then click on the Financials tab. Then you'll see a chart that looks like this, and you'll see all the details like revenue, expenses, and net profit. Then you want to look at the trend, and you want a company that is overall trending upwards in profits. Apple fits this qualification. The total revenue has been increasing overall. Its expenses have been increasing overall as well, but its net profit is also increasing, which is very important. We want to evaluate the business because Warren Buffett advises that behind every stock is a business. So with a sound and strong foundation with a company, you'll have a strong foundation for the stock. And if the business is overall doing well with future prospects for success, the stock will also be successful. Next, we can consider Apple qualitatively looking forward. Do you still believe in the company, or is the money better spent elsewhere? For example, with your calculations, you value Apple to be $170 in 5 years. Because the price is currently $130, it is undervalued, so you want to still hold. Next, we'll close out the video with some general philosophy. The first lesson is to ignore the noise. Don't get distracted by small-term fluctuations. When you look at the bigger picture, you can identify trends, and then you can form your strategy. The next lesson is to scrutinize the hype. Whenever you hear the next hottest thing, something that can transform the world, you want to be critical whenever a company or the media claims these things. Follow Buffett's advice. The best moves are usually the boring ones. The next advice is to have a concrete plan. You want to identify your budget, which includes your total income, expenses, and then the cash flow. Then you want to look at the savings and investment portfolio. How much do you have currently, and how much can you contribute to it? And you also want to consider upcoming expenses, such as wedding, purchasing a home or car, major medical bills, or if you're planning to raise children. And although you have a concrete plan, we understand that life happens. Plans can change, and that's okay. So it's okay to be flexible, but by having a plan, you have a guideline that you can adjust from. The final advice is to maintain a healthy relationship with money. Don't be afraid of spending and investing, but also don't be compulsive and gamble. Money is a tool that will allow you to support yourself and your family, so it's important to remember to maintain a healthy balance in life. This will be a balance between your needs, wants, and luxuries. Thanks for watching. Hi guys, I hope you enjoyed our video. If you'd like to support our channel, you can check out our Patreon or buy me a coffee. Be sure to also check out our Instagram and YouTube accounts, and to comment, like, and subscribe. Thanks for watching.